Hope you all had an awesome weekend. So a quick one here on nat gas, gold, silver and crude oil, starting with natural gas. So what do we have right here? As you can see, the price opened above in gap, and let me show you what I've said in my last video so that we can understand conditions and entries. I'm also considering the upper level of a double bottom pattern. Now, that is a valid double bottom pattern according to my rule, very aggressive double bottom. So it's totally up to you. If you want to enter at this green candle, take your stop loss below this lower rejection box, take profit 1-to-1 initially and manage it wherever you want to manage your take profit. It's totally up to you. Nice one. So as you can see how nicely the price bounced up and opened above in gap. Now let me show you, if you are in my MMTA full course student, you know what sort of entry we got right here. And if you follow me here on YouTube, you know that it is a very aggressive entry with this green candle. Now this candle closed on Friday, one day before the market closes. Now if you have already entered here, that would have hit your take profit easily. 1.421 would have been hit easily from here. If you look here, here's your entry, stop loss below, and that is easily 1.421 targets has been hit. Now there's a minor double bottom, as I clearly mentioned that I won't be expecting a big reversal from here, but we had a condition and price did push up from here. So what to expect from here? Now I got lots of messages that we are getting head and shoulder pattern bearish, but at this point let me clear one thing for you. Head and shoulder patterns are the reversal patterns, and I normally look at this pattern when we have these type of pattern forms in an uptrend or a downtrend. So it is not a downtrend. So it is not an uptrend. What I mean by that, let's say the price was pushing up and then here it forms a head and shoulder pattern. In that case, that will be a good reversal signal. But now here we are just pushing lower and then prices form this pattern. Yes, it is a head and shoulder pattern, but it is not something major we need to look at. But we can expect some reaction out of this pattern, which I'm going to mention in a very short while. So at this point, first, we are still not completely bullish as we are still below 50 and 20 EMA. For now, for the next bullish trade, I want to see a price to completely broken above this termination box right here, which is 1.804, that goes to 1.829. Once we are completely broken above, in that case we have a likely signal the price will then push up to the next level of resistance, which I'm going to mention very shortly. So the first step will be a break above 50 EMA. We might get a rejection, then a pullback, then a possible push up, and then we can start to look for the pullback entry above 50 EMA. Just a scalp, not something which I would like to manage. But once we are broken above this little anchor level, only then I'll look at the upside, which is right here. Now let's talk about head and shoulder pattern. So price push down here on Ovanda. We do not have a valid pattern on the other platform because I have some rules for that, and some rules are not met there. But here we have a valid rule, price push up, we have a left shoulder head, and then the price push down. Now we still do not have a right shoulder. For the price to form a right shoulder, it must retest a termination zone, which is right here. Once the price retests the termination zone, then it is the whole area where I would like to see an entry condition like bearish engulfer or 382 candle only. These are the only two candlestick patterns I'll be looking at, nothing else. If we have push up, bearish engulfers or a 382 candles, in that case we can expect some push down that is enough to hit your target. Stop loss can be above, take profit wherever you want to take it. So that will be a minor, not something I call a reversal, but we can get a possible reaction looking at a little zone from here to here. We can get some push down if we have a completion of a right shoulder and a possible entry condition, which I've just mentioned. So wait for that. I'm not taking trades for natural gas after this good push up, but I'm still paying attention to this area for my double bottom trades. Now let's say we have no condition I've just explained, we have no head and shoulder pattern I've just explained, and the price just push down right here in this zone, which is 1.476, that goes to 1.645. If the price pushes down in this zone, first we have this rejection box right here on a daily time frame. If we have a retest and then a bullish engulfer without a candle, very important, without a candle to closed with a body, wick can allow to go below, but a candle is not allowed. If the candle has closed below this yellow box, in that case we will have a continuation to the lower level from where the price will push up. But for the valid double bottom, very important, I want to see a retest followed by bullish engulfer or a 382 candle for a valid double bottom on a daily time frame. Now let's look at weekly time frame as well. As I've mentioned in my last video that if we have a green candle, very important. If you remember my weekends video, I've said that we already have a double bottom on weekly time frame. That is why we can expect a good push up. Now if you look here, it is a wake of this double bottom pattern, a rejection box right here for a weekly time frame. Now I've clearly mentioned if we have a green candle for a double bottom, in that case we have a strong double bottom on a weekly time frame. Now this candle will close next week. If this candle closes next week as a green candle, then we have a very likely chance then price will start to push up and possibly reverse from here and push up massively, because in that case we will have a major double bottom on a weekly time frame. We are getting this green candle. If closed as that a green candle, we have a valid double bottom on a weekly time frame. And remember, on a weekly time frame we might see so many ups and downs. On a smaller time frame we might also see some valid trades on smaller time frame. But if you're someone who are a long-term trader, in that case you keep your stop loss below, take profit wherever you want to take it. That's totally up to you. But for short term we can still look for some condition. Like I mentioned, the head and shoulder pattern already. If we have a combination of right shoulder, bearish engulfer, we can get a possible push down. So I will still look for double bottoms on weekly and on daily and on 4-hour time frame wherever I get a condition. So on daily, the rejection box is right here. Let me show that, which is my yellow box right here. So on a daily time frame, if we have a candle pushed down this week with a bullish engulfer, rest all the conditions are same. Without a candle to close below, in that case we have a massive double bottom on 4-hour time frame. Stop loss can be below, take profit wherever you want to take it. So we are in a buying area, but in this process we can get some push up and push down before the price will push up. So this is a detailed analysis. If you are confused, feel free to go back, rewatch. I'm sure you're going to get a concept of it. So this is what I'm looking at. These are the conditions I'll be looking at for possible buy trades, for sell trades as well, if we have this condition. Otherwise we are looking for buy condition, double bottoms on all the time frames wherever we get. But remember, on weekly, if this candle closes a green candle, we have a possible buy signal. So everything is same. Just want to give you the zones here on the other platforms. 1.573, that goes to 1.676 here on this platform. On Nemex, if you are trading on this platform, look for the double bottoms, and here the zone which is right here, 1.467, that goes to 1.597. now here the rejection box is also like this, and here the rejection box for capital.com is also like this. So wait for that. These are the conditions now I'll be looking at for all these platforms. If you are trading, wherever you are trading, look for the valid condition. Make sure without a condition, without entry, you are just gambling, and it is better to wait than regret and taking a wrong trade. Please do not waste your hard-earned money. Let's jump on to gold. Gold is now pushing lower and has still not hit 50% retracement. Now at this point, if you have seen my how to trade gold and silver ratio video, it is linked in the description. Price just hit a level of support. A support here mean a resistance on gold and silver. A push up here means a push down on gold and silver. So I'm getting a possible buy signal from here, and if you have a possible push up here, then on silver we can likely get a possible push down to this trend continuation zone, which I've already mentioned, 24.26, that goes to 24.66. If we have a push down to this zone with a bullish engulfer, in that case I'm gonna go long till the price hit a level of resistance above, which is right here, 25.47, that goes to 26.04, from where we are looking for counter trend trade with bearish engulfers or double top condition. So wait for that. Once we have a condition, we are good to go short or long, but whatever you find a condition. Here on gold, exactly the same. If we get a possible pullback to 50% retracement, in that case we can get a possible push up, an aggressive entry, very aggressive entry. If you are aggressive trader, stop loss, take profit can be 1 ATR initially, or you can go 2 ATR, or you can manage it till this 1.618 retracement, which is quite high. That's totally up to you. Otherwise, if you are not an aggressive trader, then I will look at the green zone for my next buy trade, or this little anchor level, which is 2085.64, that goes to 2093.979, from where we can get a possible push up, or a green zone from where we can get a massive push up if we have this much big pullback. So If I see a condition, only then I'm going to look for my buy trade. So keep an eye, these are conditions. Now I'll be looking at for gold and silver. Next we have crude oil. Nicely good pump out of crude oil. Now a couple of weeks ago I've said that when we had this breach, I've said that the price will likely push up and break above because we have a breach of this level. That has exactly happened. We had a signal a couple of weeks ago. If you followed me, you know that I've said that. Now at this point I'm looking at this level 78.06 that goes up to 79.97 for my next possible buy trade. If you have a push down followed by bullish engulfers or a double bottom, in that case I'm going to go long. Otherwise, aggressive entry, let this candle close first to the zone below with the Fibonacci retracement. 50% retracement can be your buy limit order. Take profit 180 or 1.618 retracement, then exit and look for the next entry condition. But let this candle closed. Once we have this close of this candle and we see a pullback, only then plot your Fibonacci tool. So for now, I'm expecting a price push up, and a less aggressive entry will be a pullback of few candles, few red candles above 50 EMA, followed by bullish engulfers, and keep on taking longs or a long from the zone I've just mentioned. So that's it for commodities, guys. Hope you got a value. If yes, hit the like button for me. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next one. Till then, take care.